What's going on, ladies and gentlemen? Welcome. I am the Crypto Crow, and I am going to be teaching you some stuff today. I haven't been doing any teaching of anything in quite some time. And many of you guys and gals know that I've been trading kind of on and off for quite a long time. And I'm also getting used to my new camera, where it's at and how everything's set up. I'm obviously going to change it again. But anyway, I'm going to be showing you charts. I'm going to be showing you data. I'm going to be showing you indicators and tools. And I'm going to be showing you basically what I've been doing. Like today, I've had a hell of a day. I've made $461.11 trading just this morning. And I've been just... a lot of you guys that have been following me for a long time know I'm always a student. I'm always a student first, and then I'm a teacher last. And as I'm learning new things and I'm getting better at new things, I start to share what I learn. And now I have been trading on and off for years. Okay. I mean, I remember being up late night one night trading Bitcoin Cash against Bitcoin back and forth all into the wee hours of the morning and thought I was a stud trader because I made like $1,500 or something that night. And my wife thought I was losing my mind. I was super stressed. I was shaking the whole time. It was like kind of an adrenaline rush. But it was great because I kind of discovered what was happening. It was almost like a little dance back and forth. And I traded the whole thing beautifully. And that was years ago. And I've done a lot of trading since then, but I never really show anybody anything because I haven't taken to it consistently each and every day throughout the day, looking for trades, understanding different indicators and different things to help. And because thanks to Trading Wars, honestly, I since I did Trading Wars on Debate Crypto, I did a lot of Degens stuff on there. Okay. And I'm going to be doing things a little differently this time around. That's going to start for me Thursday. So you'll be able to watch there. We'll see if I can't get first place this time. And I'm learning so much stuff. I've been reading books. I've been watching a million videos. I've been doing so many different things. And a lot of the stuff I watch is honestly kind of bullshit. I mean, honestly, I feel like there are so many guys repeating each other. And it's obvious that a lot of the traders on YouTube, I mean, there are some legitimate ones, but I feel like everybody's trying to... I don't know what they're trying to accomplish really, whether it's for YouTube views or whatever, but I feel like a lot of the stuff is either regurgitating the same stuff or it's just not, unless it's just me, it's just not real. It's just not real. From what I'm seeing, comparing it to what I'm learning and I'm picking up in different videos, I'm like, it's just not real. So I'm going to be showing you guys some real stuff. Now, this isn't going to be super in depth. This is a very beginner's video. Okay. And for all of you super traders out there that trade more than me and you know more than me, help me out in the comments. Help the people watching this video out in the comments. Let people know, is what I'm teaching legit? Is it going to help people? Do you have more to add? Let's turn this into a learning experience for everybody. Okay. So one of the first things I've been doing, I'm going to go to my browser and I'm going to show you this because this to me is like a secret weapon. So many of you guys have been watching me just trade Bitcoin solely on this Trade Wars, and it's just kind of slow, right? And I'm thinking, okay, I need some volatility. I need some coins that are really moving in the market, whether it's up or down or all around. I need some more volatility. So what did I do? Well, I happen to have an account on Masari.io. And I'm looking through and I had to go in and change the settings here. And I added some filters. I wanted 30-day volatility added to this. And I wanted a circulating market cap of greater than $1 billion. Okay. And so that's what all of these are. These are all tokens that have a circulating market cap of over $1 billion. And lo and behold, look at these beautiful volatility scores. So if I were to click this here, this is going to change. So this is the lowest volatile crypto right now. DAI. Okay. True USD. Tron is like the lowest volatility apparently on this. So at a 0.32, but I want the highest volatility. I want some degen activity. And this is trading for degens right here, ladies and gentlemen. The number one most volatile right now is EGLD. It's a contract platform, smart contract platform, Multiverse X. And you can see here, the volatility isn't necessarily what is getting the biggest price change. It's just what's going up and down, what's moving the most. Thorchain or Rune, I'm like, that looks good to me. 1.37. I looked a little bit into the project and I thought, okay, this is what I think I want to start trading with as an experiment. Solana even is up really high. I mean, up 441% year to date. Okay. That's pretty insane. So I thought, all right, but I don't want to do Solana. I don't want to even bother with Solana. Caspa, it looks that's a 1.07. You can see these numbers over here on the right. I could probably zoom in a little bit, but it might kick this out of frame. Yeah, it is. So let me see if I can move. Yeah, here we go. So now you can see the numbers a little bit better. So Thorchain over here, 1.37%. So anyway, this is what I use to find what I'm going to be showing you, Rune. And I've been trading on Rune. I literally made almost $500 this morning trading Rune. Yesterday, I made some money trading shorts, and it's been good. All right, so now we're looking at a chart for Rune USD Tether on Binance. It's a Binance chart. Even though I'm not trading on Binance, I'm trading on Fairdesk. Fairdesk is my trade sponsor, and very grateful to them because they've been really, really good to me. And we're working on some some giveaways and things. You're going to notice in my trades, I've got some big green ones. I got liquidated down here. I've had all kinds of crazy stuff. A lot of this has been experimentation. I'm going to explain that to you as we get into my notes and different things to go over with you. So don't freak out like, look, Crow got liquidated and he's teaching us how to trade. I know it, but there's a good reason for it. Okay. So don't get excited. But anyway, so looking at Rune, what we're looking at right now, this is actually my indicator. Okay. All of this is basically a part of the indicator that I've had being worked on for a while now. And it's working. It's doing pretty well for me. There are certain nuances to it that I'm going to explain a bit. And we haven't released it yet. It's actually going to be part of a much larger suite. But it's working and I'm digging it. And it's been very, very helpful. Now, what you're going to see here is you're going to see liquidity zones in here. You're going to see support resistance lines. You're going to see that, some of them are green, some of them are red, and that's all fine and dandy. You're going to see some ribbons here. These are EMA ribbons showing bearish or bullish activity. I really kind of want to change these to like green and red, but I don't want too much green and red. You're going to see candle colorization, where you're going to see basically the stronger the trend, the darker the color is in support or against the particular trend. So the darker green candles are basically like, okay, we're starting to reverse from a red zone here. The candles weren't super red, so it's probably not going to take as long to reverse. Then it starts to reverse. You get this doji candle or whatever. I can't remember what all the candles are called right now. But we get this, what I would consider a reversal candle. And then we start to change color, and you can see the higher up we go, the darker the red is, right? Until we start hitting some weird zones here. So what you're seeing, though, too, is you're seeing a weak flying crow indication. This was a trigger. Over here, you see a weak diving crow. So once the green starts turning color and changing into bearish momentum, we start getting this weak diving crow. Ultimately, we want to see a strong diving crow. And what this diving crow, flying crow, all of that is all, it's multiple indications triggering at the same time that further builds the strength of this trigger. So a strong flying crow or a weak flying crow, you can see here we were all the way down here. We started to move up, built momentum. There are a lot of other indications within this indicator, and it's basically like a 4-point confluence. That's what I was trying to say. And this confluence is basically the more points of confluence there are, the stronger the signal, with strong being the best. I think I got a strong all the way down here somewhere. No. So this is a 15-minute chart. I will also say that the weak signals tend to be fairly accurate on lower time frames. This is a 15-minute, and like a 5-minute, the weaker signals are still pretty solid. But the weak signals, while you can trade off of those, you want to make sure you have stop losses, trailing stops, things like that in place if at all possible. Now, so on my Bitcoin chart, it's on here. my market sessions are really important because, and I'm just basically explaining all of the little nuances of everything before I start diving into how it all works together. But these market sessions, you're going to see UK market session, US market session. You're going to see little spaces in here where the market transitions and like, it's like closed for business, so to speak, even though crypto's never closed. Here on Bitcoin, on a 15-minute candle, we got a strong diving crow on this candle. So that's the gist of everything associated with the indicator. So now we're going to dive into some of the notes and explain what I'm looking for and how I'm actually making trades. So let's use this as an example. The strong diving crow might trigger mid-candle here. But ultimately what I want to see is I want to see this candle close and this not repaint. If the candle closes and we move into a second candle in the same direction, this will stay. It will no longer repaint. And then I'll know that that's likely a good signal to trade from. Now, what I'm also looking at is, are we below, if it's a bearish signal, are we below these EMAs? Are we below the ribbon or above the ribbon? If we're below the ribbon, that's another point of confluence where I'm like, okay, this is going to be a solid bearish trade. And you can also look at the MACD if you want. If the MACD is in the red, if it's red below the zero line, that's also bearish. All of these things are pointing. Now, at the same time, I'm also looking at the price resistance and support levels, because given where we're at, I want to try and get an idea as to, okay, so I got this signal as we're basically loading into a support level, and I'm curious at this point, are we going to continue further down, or are we going to bounce off of this? Because you can see here, all of these candles, we're bouncing off of the bottom of this support level. We're not breaking through it. And then we went up, right? And then we went to the same place here. These support levels, these are automatically placed. They're automatically printed in my indicator, which is helping me immensely because I don't have to do it by hand. And then when we start to really move down and build momentum to the downside in this price action here, we finally do break out of this support level. And typically what happens is when we've completely cleared it and we've closed candles down and we've like really broken through, then this will likely turn green when it becomes some form of resistance or, now it is resistance. That's why it's red. Sorry. So that's basically what I'm looking at. So that basically makes me feel more confident that the price is going to go lower. All of this stuff is lining up. I will enter a trade. And as the price is dropping, at that point, I'm entering into so either I've got my stop loss set, or I'm going to set like an advanced limit closure to the order. Okay. So what that means is when I'm here and I'm making an order, I can either do a market order or I could do a limit order. Well, I sometimes I might degen into a market order, but that's always bad. That's the worst way to get into a trade. Why? Because the fees can be insane. All right. And what's happening is, depending on what I'm seeing the price do. So to give you an example, what happens here recently? So this is a 15-minute chart. We bounced off of this support and we started to move up. So let's say, and I haven't had any triggers because I just had a weak diving crow, and that has not changed. We haven't gotten a weak flying crow yet. Nothing else has changed. So it's basically, we're trying to figure out if the momentum is going to change, if the trend's going to change. But you can see we did something similar here, and it just continued to pour back down. But we bounced off of the support. The price reversed, which is what I'm generally looking at, because typically if I'm watching the price here, I'm waiting to see how far do we go. Do we bounce off of this, or do we continue through it? If we're going to continue through it, then we could potentially get a free fall in price action, right? And I'm waiting to see if I get a strong diving crow at some point down here, because that will tell me that there's a whole 4-point confluence in what's happening, and it's likely going to be a pretty decent trade even after the price has fallen that low. But we didn't. We bounced off of the support. We started moving up. But let's say we're moving past this and we close this candle here. Well, at this point, I'm going to set a limit order. So I might say, well, from here, we might go long, because even though I don't have any indicators that are giving me more of a foolproof example or a foolproof presentation for me to trade off of, I'm still seeing this bounce. And if this second candle here closes above and it's basically making a new high in this range here, this small range, then we may very well be transitioning out of this downward spiral. All right. So what I'm going to do is I'm going to look at the price, and if the price is, so right here, it's at $4.83, right? So what I'm going to do is I'm going to go to my exchange and I'm going to say, I want a limit order and I want to go long. So my price trigger, I'm going to say I want, so $4.80. I'm going to say I want $4 and maybe 85 cents. Okay. And then I set how much I want to put risk on the trade. So I might risk 20% of my book. Early on, you definitely should not risk more than like 2% at a time. Okay. That's just really, you're playing a dangerous game if you're risking your entire book. So, and then I would say buy long. And then what'll happen is, well, the price here is at $4.91. So I might say, I'm going to put in a limit order at around $5 or no, not even that. I might say $4.91. I might say $4.95. Okay. Because what that does is that's saying that if the price moves up to $4.95, so if it moves up to here, well, at that point, this is just for examples. Okay. I'm not really trading this and it's just basically to say, if I'm down here and the price is turning around, I want to catch a buy. I want to catch a long so that I'm catching these candles. I'm catching this potential momentum to the upside, but I don't want to do it as a marketed order and pay more fees. I'm going to do it as a limit order, and I want the price to come to me. Okay. So if I set it at like 485, then my limit order would have activated right around here, and I'd be catching this upside. And then from there, I would probably, if I were to hazard a guess, because I just did this morning and it worked out really well for me, I would say, okay, well, I might set my sell. I might exit that close when the price gets up to 496. 3.5 or something thereabouts, because I can see we've had several touches on this and we're likely going to get it again. If this video concludes, I don't know, when you're watching it, look at the price chart. Was I right? Because this would be my guess. I would probably set up an exit around here. Or if I wanted to let that price ride, at that point, I might say, okay, well, we're moving up here. Now I'm going to set a stop limit so that if the price just wants to move, I might just let it move, not even worry about taking profit, set a stop limit execution so that if the price were to fall back down, it automatically closes my trade with me at profit, trade complete. However, the caveat to that is that stop limits don't always trigger. Okay. If we're getting a gradual price increase candle to candle every 15 minutes and we're slowly moving up and we slowly move back down every 15 minutes, the price is going to start petering out, then my stop limit might work. But if we're up here and my stop limit is down here and that reverse candle just suddenly plummets and it's one red line all the way down, boom, 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 like there's no stops, that may very well run all the way through your stop limit and you'll be stuck in a losing trade. That is why I've got some of this, because if I enter a trade and I put a stop limit thinking, oh, it'll be fine, and if it goes down from here, don't go to bed. These are the lessons that I've been learning. Don't enter a trade, put in a stop limit, and then go to bed, because you could get liquidated. So that is a lesson learned. And it's not necessarily a fault of the exchange, but rather just that the price moves extremely fast, especially when you're talking about numbers like this, $4 or $5. A price can move 10 cents in a heartbeat and your stop is blown through. It doesn't activate. And then if it goes bearish the rest of the night, you're getting liquidated, especially if you're at high leverage. And this is basically what I'm going to explain to you here. You can see up here on the top right, I'm at 10x leverage. That's it. That's all I'm doing. I've played around with 20x leverage. And, it's just not worth it. It really isn't worth it. Why is that? Because if you're leverage trading at 10x leverage, I could go into a trade right here, and maybe I go into a trade at 491. I'm actually curious if by the time I'm done with this part of the lecture here, if we end up going back here and reversing, because that's what I'm seeing just looking at these candles. But anyway, so if I go into a 10x leverage trade at $4.95 and I'm going into a short, well, what does that mean? Well, that means that my liquidation price might be somewhere at like $6, $6.25, right? So I've got a big chunk of air and opportunity so that the price could go up on my short. It can move up on me, which would be the opposite direction of my short. And then I might still be okay, because the odds of me getting liquidated with that much of a spread, moving all the way past all of this up to $6, up to higher than that, it's not that likely, right? Now, doesn't mean that it won't stay above and it won't stay a losing trade. It depends on where we're at. It depends on all these other things like the volume. It depends on all these other metrics on the chart, right? The support, resistance, the trend, all of that. So, but when I increase my leverage, what I'm ultimately doing, while I can make more if the price moves in the direction I expect it to, whether I'm going long or I'm going short, if it reverses on me, well, now the higher my leverage, the sooner I can be liquidated. So if I were to go into a 20x trade, instead of my liquidation price being somewhere around $6, now my liquidation price might be down, $5. Okay. So if I'm going into a short and then it goes long on me instead, I might get liquidated at $5.10. And that just continues to get worse and worse to the point where the higher the leverage you use, some people trading at 100x leverage, just truly degenning into a trade, though you can get liquidated. If the price is sitting here at $4.91, you could get liquidated at $4.95. Boom, you're out just like that. And you've lost everything you put up. Because ultimately what this leverage trading is it's allowing you to put up $2,000. So my margin balance is $2,089. And then I put in a 10x leverage. It's basically allowing me to trade with more money than I actually have in my bank. Okay. And so you're risking you're risking the margins on that. So if your trade goes bad on you, you're basically risking, because you're trading with a lot more money than you actually have. And the penalty for that is basically getting potentially liquidated. So that's the big thing here. So the one thing that I'm going to get to some of my notes here at this point, because also volume is a really big deal. So, depending on what your volume in your trade looks like, if you're seeing a price action reversal of some kind, but volume is really low, then that tells me that so like on this candle here, price was pretty high and we wicked all the way down here. So it was a pretty aggressive effort to push the price down. That looks like market making to me, but it didn't go well because there's a more bullish sentiment than there is otherwise. So that's when we got this kind of indecision candle before we got a real reversal. And that reversal was strong. You can see it's a fairly decent size volume candle here as we reversed and we continued moving up. But you can also see that volume is starting to peter out a little bit. All right. So this reversal, like I said, it might come right up to around this area and then start to come back down. And then we're potentially looking at, basically coming down here and either bouncing or breaking through. The overall trend, though, is bearish. And that's also, are we going to break through this ribbon here? So these are all things that I'm looking at while I'm looking to enter a trade. And ultimately, these indicators, my indicator, everything that it does, I've got the moving averages. This plays a big role because you can see right now, I'm going to make this really big. You can see that in these moving averages load in with the indicator, but you can see we're just barely tipping that, right? So we're just barely touching on this. That moving average right here can very easily become either support or resistance on its own, because out in the midst of this big Sahara where there isn't much liquidity pooling anywhere to the upside or the downside, all of that, there isn't much of that, but that moving average can very much play that. So we'll see. We might either bounce off of this and start our correction and start pulling back down into or through this support level, and then that support can turn into resistance. It'll change to red, and then now we start bouncing down off of that, right? So, and all of that plays a factor. And on top of all of that, when you're watching the price action, the market session plays a big role, because you'll notice if you're studying the price action, the very beginning hours of a new market session can ultimately play a role in dictating what's likely going to be the range in price activity throughout that market session. And on top of that, what I see sometimes, now this is Bitcoin on a 15-minute candle, you can see here at the start of the UK session, it was kind of bullish, but started to peter out, and then it started to just range sideways. Well, the US picked it up and said, all right, we're going to take that all the way down. And then it started to move up, and it's just this very similar price action. But sometimes I'll see like Asia does the opposite of whatever everything else is. So if Asia's bullish and then starts to change, the other markets typically, not in the current market cycles of today, or the market sessions of today, it's all been very bearish today. But typically I'll see Asia be really bullish, and then the UK will pick it up, range sideways, and the US will dump it all on its ass. And I see that quite a bit. So, or you can see the reverse of that. So typically whatever's happening in Asia, the opposite is what I generally see playing out. But you can backtest that. You can go into the previous cycles, and you can say, okay, when were the other market sessions? Here's Asia. Look, exactly what I'm talking about. Asia, boom, 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 just dropped. UK picked up the market. It's like watching a football game. UK enters the market, boom, they're bullish as hell. US, they start ranging sideways, wanting to do what it wants to do. But generally speaking, when I see what's going on in Asia, Asia has their fun in the market. And then, the UK or the US markets take that ball, run with it, and they do the polar opposite. And when you back test that later, you'll know exactly what I'm saying. So that plays a role in what I'm thinking might happen as I'm moving forward in my trading. Okay. I hope you guys are learning a lot of interesting stuff on here, and I really am looking forward to your comments. Now, what I'm going to suggest is when you're starting a trade account, let's say you use my link down below and you set up a Fairdesk account. I would suggest trading only on a demo account. I want you to learn the nuances of what these indicators do on your trading view. I want you to really be able to start looking at this stuff and it make more sense to you. I've been looking at this. I've been working with this stuff now for a few weeks as we've been fine tuning the indicators, adding stuff, taking stuff away, what's helpful, what's not. And this is ultimately, I'm molding all of this indicators, everything you see here outside of the MACD. I just like to have that up, even though it's a part of the confluence within the weak or strong crow signals. This is all about my trading style that I'm developing myself based off of the patterns that I'm seeing and what sort of information I want to make decisions based off of. And it may be different for you. Okay. So I want to make that very clear. It could very well be different for you. And so that's basically what I'm talking about here. Now, when you're trading, and you're trying to learn how the indicators work, and you're trying to pick up on all of the little nuances that I'm trying to share with you right now, I want you to use a demo account, and you should use a demo account for at least a couple of weeks, honestly, because if you get liquidated, chances are you're not going to be able to afford to get liquidated, right? We don't want that. We want you trading 2% of your book. We want you using low leverage, if at all. We want you, 10x leverage is pretty fair. But again, that's not financial advice. Do what you're going to do. Just don't degen into high leverage. You're going to get wrecked. Okay. I do not want that to happen. I want to build a solid army of traders. I really do. That's my goal. I want us all to do well together. That's why I'm sharing some of my little tips and my secrets here. Now, patience is absolutely key. And I'm going to reduce this because I want to have a straight talk with you guys for a second. Patience is absolutely key in trading. And this is something that I have been absolutely training myself to do. When I'm looking at the price action of a chart, and I'm in a trade, before I would go and I would go into a trade, and then for whatever reason, it immediately go against me. Well, I'm learning that's by design, because I'm learning a lot more about the market maker sentiment and what market makers do to basically trigger that emotional reaction. Oh, I made a trade. Oh, now it's going against me. I'm just going to go ahead and close this trade before I lose all my money. Wrong. That is what I've been learning. And a big part of what my big trade this morning, this $283 trade, was because I went against that. And I said, okay, here's support, here's resistance, here's what I think is going to happen. It went against me initially, but I knew that the overall trend was going to be bearish. I had to wait for it to come back. That trade right there was negative almost $350, and I didn't freak out. I didn't have a stop loss set either, but I really felt strongly that that everything was pointing to bearish movement. Okay. I wouldn't advise that, but my point is that I've been learning to be more patient. I set a stop limit exit so that I said, all right, I'm just going to let this go. I've got my advanced limit closed. If the price happens to drop down to this, I'll make a good chunk of money. I'm going to let the market come to me. And sure enough, it's exactly what happened. I came back. I saw that my trade I closed out at almost 17% ROI. I had another 17% ROI trade earlier this afternoon. And that was using limit orders and things. So you notice that the fees are much lower. And that's the key thing, man. I can't stress it enough. Patience is absolutely key. If you allow yourself to be manipulated by the market makers, they're going to manipulate you and they're going to take your money. Okay. This is another point I wanted to make. Never go all in on a trade. I have been, because my goal here is to ultimately trade consistently every day. Like if I can make $500 a day trading off a $2,000 account, well, I'm being a bit of a degen because I'm trading the majority of my book. Okay. Or what did I risk? I don't even remember. It was a 10X trade. It's not telling me exactly how much I traded with, but I think that was a full book trade. But I don't want any of you guys doing that. I really don't. I have been experimenting a lot with my trading activity. Okay, so I want to make that abundantly clear. Some of these trades are absolute degen trades just to see what would happen based off of certain levels of indication with all of the stuff I had working. I've been learning the different nuances, which is why I'm now doing this video. I've done so much experimentation where I'm like, okay, this is what you want to look for. This is what matters. This is what means something, right? So. But you never go all in, especially if you don't have money where you can afford to go all in and potentially lose. Okay. So I want to make that clear. Volume, I've already kind of touched on. Volume shows momentum. The higher the volume on a candle direction, it shows the strength of the condition. So ultimately, that's what I was trying to point out. If we're getting a reversal and the volume candle is really, really high, then that's basically saying there's a lot of downward pressure. There's a lot more downward trade volume pushing that price down than otherwise. Sometimes you might get a big red candle, but the volume is really, really low, which means that the activity on the order books is not that strong, which means ultimately it could be very easy for that to reverse. Okay. So that's what volume profiles is a whole study all in and of itself, which I'm going to be going into myself. I'm going to be learning more about that. I've got some books on it. I've got books on everything. But that's a really big deal. And on top of that, I can't show you because it's on another computer, but I'm actually running Trading Light. And I just started diving into tutorials on using that. I'm not even going to show it until I can really teach you how to use it effectively. And I'm not going to know that until I'm done. It might take me a couple weeks to really learn the ins and outs of that, because it basically looks like a vomit. Somebody vomited colored blocks all over the place. And there's so many additional indications, so many different things to add to that. I'm going to learn my own setup, and then I'll share that with you in time. Support and resistance, obviously that matters. It's a big deal. You can really dictate what the potential price action is going to be based off of support and resistance alone. And when you create your own confluence model and you really start to understand the nuances of how these all work together, you can really start getting good at predicting price action before it happens. And you're not always going to be right, because the market makers know this too, and they really are plotting against you. Moving averages obviously matter. Market sessions matter. So I've already covered a lot of this without even looking at my notes. 10x leverage at max. That's what I would definitely, that's the bulk of my notes. I mean, this is a 30-minute video, and I think I've covered a great deal. Now, hopefully this stuff helps you. And, I really want people to do well trading. I want you to join me. I'm adding my trades. I'm adding most of my trades, not everything, but this ko-fi.com/cryptocrow. Follow me down there. It's free. It doesn't cost you anything. And I'm going to be sharing more notes as time moves forward. If you want to be trading with me, I don't do live trading. I was going to, and I don't think you really can. I'm not 100% sure, but I don't want people degenning into my trades because I'm not always right either. And I have, the means of doing things about it. In terms of like, if I lose a little money, I'm not losing sleep over it. And sometimes I get a hunch and I want to try it out. And I'm going against my indicators sometimes, which is another thing I should not do. I am learning how to let my systems that I'm currently developing, what I'm looking at, what I'm looking for, what means something to me, and how I can better predict the potential outcome of trades, dictate my trades rather than, all the indicators are saying this, but I've got a gut feeling that this is going to happen. That gut feeling is what the market makers are putting in you so that they can trade against you. And that is definitely something that I've been learning because it's happened to me multiple times. Sometimes my gut will be like, oh, look at that. It's going really well. Boom, on a dime, it reverses, tanks. And I'm like, son of a gun, my gut was wrong after all. And you think you're a wizard because you get that little point where you're like, I think I'm onto something, and it works in your favor for a candle or two, and then it plummets or it just goes against you the opposite direction. So there are a lot of things that I'm learning. I'm really looking forward to hopefully being able to help educate you guys and teach you guys. This is a whole new journey for me in the sense that this is something that I am genuinely doing every day now. I want to learn every trade I can. I've dabbled in like Tone Base and his DeMark indicator, which is cool. That's his system. He likes that. I just couldn't take to it. The Elliott waves. Elliott wave to me is very much a self-fulfilling prophecy indicator. It's like the more people that are using Elliott waves to make trades, the more accurate it can be, but the market can completely reverse on any Elliott wave setup. And that to me is not something I want to rely on. The Fibonacci, the Fibonacci. A lot of people like the Fibonacci, and a lot of people do use that. And I understand the whole concept of it. I have books on all of this stuff. I'm trying to establish for myself a way that I can trade in a way that makes the most sense to me, and it may not resonate with you. You may look at everything I'm looking at. I mean, I've been doing pretty well. Like on the trades that I'm actively like taking it very seriously and I'm trying to enter, I want something good to come of it. I've had a lot of green and I've been doing well, and I actually have a couple accounts. So I'm doing things on multiple accounts. And I've been doing really well, and it's a good time. And all the trades where I like had a hunch or I'm going to degen and try something and I'm going to see, I wonder how this will work out because this is what I'm seeing, but I don't really like it. I lose or like I've said, I've had a couple of situations where I've set a stop limit and my stop limit got blown through and I lost a big trade, right? So anything can happen. It's still a dangerous game. And, the higher the leverage, the more dangerous it is. Don't get greedy. Be careful. The biggest part, I'm telling you folks right now, for those of you that are new, the biggest challenge I've been facing as a trader, consistently trading day in and day out, is I'm watching trades, I'm watching setups, I'm waiting for triggers, I'm waiting for something to happen, and I get bored. And when I get bored, I get impatient, and then I just want to feel something, right? And that's when I make mistakes. And I'm really training myself to keep my focus and keep my eye on the prize and not let emotions, boredom, or any other kind of emotional states trigger an anti-action to what I know is in my best interest in my trade. And that is something that I think a lot of people struggle with. And so that's something that hopefully we'll be able to help each other with over time. So hopefully this at least teaches you some things. I really would appreciate your comments. Make sure you subscribe if you haven't already. I share all kinds of stuff, and I'm going to be sharing a lot more. And until next time, guys, crow your coins. Thanks for joining me. And I will, of course, let everybody know when my indicator is done, ready for public consumption. I'll have a link there, probably right under my Fair Desk link. If you do end up joining the Fair Desk link, I will be getting little like affiliate residuals off of the volume as it accumulates and more traders are joining me. And you know, I've dabbled in something like this before, and it just wasn't my bag because I just didn't want to spend all the time trying to be a trader. But I really am committed to this. I really am liking it. I've been doing it for weeks now. And you know, Trading Wars 2, I'm coming for yo asses. I'm telling you, I've got some extra checks I haven't even shown. Yeah, I'm definitely, I'm expecting to clean house in the Trading War Season 2 on Debate Crypto. So until next time, guys, crow your coins, and I'll see you again real soon.